Well, it was a happy new year for Dalal Street. The market started 2022 with a bang, with the Sensex skyrocketing over 900 points to reclaim 59,000. Nifty also surging over 270 points to shut shop above 17,600. Markets kicked off the new year on a firm note despite rising COVID-related restrictions following a threefold jump in weekly cases. So what led to the bullish momentum in the market? Though Omicron is spreading fast, the market doesn't expect any restriction on economic activity that will impact growth and earnings. Strong GST collection numbers and India's manufacturing PMI are also showing expansion, and that helps sentiment to remain buoyant. Auto stocks were the darling of the street today after automakers reported decent sales numbers. And while markets were on a roll for the first trading session of 2022, it remains to be seen whether the rally will continue on Dalal Street. And as markets begin 2022 on a firm footing, we get you an exclusive conversation with market veteran Raamdeo Agrawal. He talks about what's in store for markets in 2022.
Hello and welcome to this Business Today Market Special. I'm Udayan Mukherjee. With me is Abha Bakaya. Let me start by wishing all of you watching a very, very happy new year. It's been a difficult year, 2021, and we certainly hope for all of you it will be a much brighter and better year. Well, this is the first of a series of pre-budget market specials that we are running on this channel, where we're getting some of the old-timers on the street to tell us how this year is shaping up from the market and whether the budget will move the needle with the kind of earnings growth which the street has been penciling in, which is the basis of the kind of move that we've seen in the market over the last couple of years. And our first guest on this series of specials is Raamdeo Agrawal of Motilal Oswal. Raamdeo, it's very good to have you on the show and wish you a very happy new year as well. But what's the sense you're getting at the start of the year? Because December was a bit of a turbulent month. Do you see more turbulence ahead in 2022, or at the end of it you think we'll be fine?
I think we should do fine for the next 12 months because my fundamental belief is that corporate earnings drive the return in the markets both. The players can come and go, but if the corporate earnings are strong, I think we have a good chance that markets will do well. Maybe if not in this 12 months, next 15 months or 17 months. But broadly, if the corporate earnings direction is right, I think we are in good wicket. And here, I think what people miss out is the size of allocation in the corporate earnings that are banking, finance, and IT. These two themselves make about 55% of the total corporate earnings, and both of them are looking to be very good for next year or two.
Both of us know that returns from the markets are never linear. They don't grow, compound at 15-17% every year. We've had 2 good years. Could this then be one of those years where investors actually don't make too much money, but the prudent course of action would still be to stay put and not get thrown by any intra-year volatility?
My idea is always to stay invested in the market, even if the market is somewhat corrective. I don't believe that one can time the market at the top as well as at the bottom. Both don't happen. So one should broadly remain allocated in the market. And it is painful to see the markets going down or not going anywhere for some time. So yes, on the back of very large return in the last 1.5 to 2 years, probabilistically it should be corrective phase, and this is a year of complete withdrawal of global stimulus and also rate hikes happening world over. So what happens in terms of flow from developed market to developing markets? Typically in the rate cycle, I believe whenever the global rate cycles are up, the global investors, they traditionally sell emerging markets and buy developed markets. So that's the kind of feel we are getting. And so I don't know what FIs will do, but as I said, the corporate earnings cycle is just about turned last year, and this year it looks to be even stronger. And I think the biggest thing is the corporate capex cycle is starting, and that should put a lot of energy into the earnings growth between 22 and 23. So yes, the returns could be muted, but definitely there is no reason for people to sell and get out and wait for the better time to come to enter the market.